I'm delighted this evening to be with Manish from Invest Like a Pro. Manish, massive thanks for joining myself this evening. Massive thanks for joining us also next week, or depending when you're listening to this video, Thursday, 22nd of July, in the flesh, in the room. Uh, Manish, you're working quite heavily at the moment with SaaS investors. Do you want to elaborate on what these investors are looking for? What type of deals are getting yourself and them excited?
Yeah, sure. Thanks, Brendan, for inviting me along. It's been a while with physical meets. I'm really looking forward to next Thursday. Yes, SaaS investors are, they have, a lot of SaaS investors have, transferred their pension across to their SaaSes. And a lot of this capital needs investing, and it's not invested. It's not invested in markets, in property. They want to get into property. Um, with a SaaS, you are restricted to commercial property, really, within your SaaS, and you can invest in loans, so third-party loans, so funding other property investors, other developers. So, the SaaS investors I work with, they are, they have a combination of interests. They want to make loans for fixed income, fixed interest loans for 12 months, 18 months duration, but they also want to invest in their own in their own properties and build up their asset base in commercial property.
Manish, you said something very interesting. 12 to 18 months is the sweet spot. I know you didn't use the word sweet spot. And sweet spot is more of a broker terminology than SaaS, although SaaS and brokerage, similar in certain respects, is to do with funding and lending at the end of the day. Why, to an outsider who's not looking at SaaS as an investment vehicle myself, why 12 to 18 months, do you think? Why not 6 months? Or do you think that's who you're connected to? People generally are more looking for the 12-month. They realize some developments can take longer than 12 months. Some developments can take longer than 18 months. Is that the reason why the sweet spot is 12 to 18 months?
Yeah, it's so you mentioned the expression sweet spot. I didn't, but actually you're right. That is the sweet spot, because if you have too short a time horizon, that's okay, but then you just need to keep recycling that money. And if you invest for 6 months, you're going to get it back in 6 months, then you have to look for other opportunities. And anything longer than 18 months means that project is quite big, and you're opening up to more risks. So I think your 12, 15 months is a good place to be looking. So yeah, it's the happy medium. Not too long, not too short.
So 12 to 18 months, the geographical spread, London bias, or not specifically London stroke southeast bias?
Yeah, typically investors are open to locations. It is supply and demand. So the supply of opportunities tends to be kind of in the southeast. So that's where people are investing in. But we've done deals up in the northeast, northwest, in the Midlands. So it doesn't really matter. We tend to be sort of within England. Don't do too much in Scotland and Wales, but there's a good market in most of the English region. So we'll look at projects on their own merits. Okay, so it doesn't really matter where they're based. If they stack up, there's a good margin of safety. There's a good return. There's good security, good exits. All of those things are ticked off. Location is kind of next on the list.
Do you think partly locations next on the list because it's also commercial rather than resi, and traditionally commercial is much more hands-off than resi, or that's not a significant factor?
Yeah, it's not hugely significant. When investors are making loans, they're not restricted to commercial or residential, because you can be lending into a development project. So even if that's residential, it doesn't matter. You can still loan to developments and development projects. So it doesn't really matter too much, really. So yeah, commercial or residential.
And in terms of developments, is it principally new build, conversions? What's the typical? Is it more about the yields which people are looking at rather than what type of building structure and so forth?
Yeah, both. We've done conversions, commercial conversions, new builds. You know, the majority tend to be where we are creating new dwellings, new residential dwellings. Okay, so whether it's conversions or new builds doesn't really matter. So that's the key thing.
Okay, so conversions of new builds. You mentioned London Southeast, but not exclusively. So, in terms of going forward, Manish, in terms of opportunities, of course, people are going to be looking at SaaS as an opportunity. To the listeners who are joining us on Thursday evening next week, how can they work with people like yourself, and how specifically can they connect with you? Not investlikeapro.co.uk, the website or email address, but what would get you excited about working with potential developers who are looking at extra funding?
Yeah, just you know, reach out if there is if you've got a project that looks like it needs funding. You know, our investors are typically conservative, so they look for kind of the safer end of the spectrum. So really, sort of first charge security is where the bulk of the appetite is. A lot of our investors also look at kind of second charge and equity type funding arrangements, but most of them are looking for first charge. Um, you know, relatively vanilla projects. So quick refurbs, um, you know, new builds that are reasonably easy to undertake, um, easy conversions. I think investors generally want something that's going to be 12 months, 15 months, easy to convert, low development risk, and that can be easily converted into products that, you know, end end occupiers want to live in, and there's a good demand in liquid areas. So that's the sort of thing from a funding point of view. If you're an investor, we also you know, we do due diligence on these opportunities. If you're an investor looking to deploy money, you know, come and reach out, register on the website that you've just mentioned, Brendan, and you'll get alerted to new opportunities coming through.
So the website's investlikeapro.co.uk. Look, what's the GDV you're looking at in terms of what's too small a deal, for example? It does it. Do you want to just elaborate what is too small for you to be interested, or is it?
I think it's there's no minimum and there's no real sort of maximum, to be honest, Brendan. So we would you know, we'd look at sort of 100k plus. We're actually looking at one right now which is reasonably small for us, which is 110,000 is the purchase price. GDV is going to be about 150. So you know, we can do those because, you know, it's going to be easy to undertake, easy to do the due diligence on. Should be a fairly straightforward valuation and a straightforward raise for that sort of thing. So you know, we're always operating with it's not crowdfunding. We're not sort of putting it out to thousands of people. It's not for public. It's for high net worth. It's a private, closed circle of investors who are looking for specific opportunities, and SaaS investors. So yeah, there's nothing's too small, really, because we can have one or two investors who can fund the whole project, or just one investor. So, and we go up to typically, you know, 3 or 4 million is probably where we've gone up to in terms of GDP.
So you're really looking for vanilla deals, would you say?
Vanilla is a good word, Brendan. Yeah, that's really sort of, that just sums it up. Vanilla deals. The more vanilla, the better, and then the more appetite there is going to be from investors.
So people can reach out to you, of course, through coming to my event on Thursday, 22nd of July. They can find out more about investlikeapro.co.uk by going onto the website as well. And Manish, you've appeared on a number of podcasts as well, if I remember correctly. I think you've appeared with the Rodcast, is that correct?
Yeah, I've been on the Rodcast. Yeah.
And possibly one or two other podcasts as well, which are property related. And you've also been featured in the likes of Property Investor News magazine.
Yeah, that's right. Yeah. I've just had a new article published in this month's Property Investor News magazine, so watch out for that.
Okay. So, Manish, I just want to say a massive thanks for taking time out this evening. Also, massive thanks for taking time out on Thursday, 22nd of July as well. As you say, it's in person. Delighted we've got Daryl Norcutt from Lendwell. It's interesting, two of you on funding. And also, it's interesting, I've got Andrew MacDonald, commercial. It's not a commercial focused evening specifically. It's a holistic spread of both residential and also commercial as well. So, look, I just want to say massive thanks to yourself and massive thanks to our other panelists as well.
If anyone's got any sort of questions on the evening in terms of investing in general, so I also look at stock markets. I run a program on stock market investing. So very happy to take questions on investing in general in sort of financial as well as property markets.
Thank you.